Hi everyone, welcome to the Timing Research web show for August 31st, 2015. Today we will be talking about the 101st weekly report from Timing Research. If you haven't had a chance to take a look at that yet, just go to TimingResearch.com/reports and you can download the current report there. I actually just noticed in the report there's a typo on the first question on the first page, so I'm going to post a corrected version in a few minutes, but that's the same, it's supposed to be the same question 2 as every other week. So I have Dave Landry hosting for me again today, so I'm going to go ahead and turn it over to him.
Thank you, David Cosmitter. Thanks to Timing Research for having me back once again. We've got a full lineup today. Kurt, let's go to you first. Tell us a little bit about your trading. Kurt Capra at pristinetrading.com. Tell us a little bit about your trading, and tell us a little bit about Pristine.com and what you do over there.
Well, thanks for having me. You know, my trading gets started as a futures trader because that's what my father, the president and founder of Pristine, was trading at the time, Greg Capra, and so I started with that and started then getting into ETFs and really more focused now on Forex trading. And what we do at Pristine is really focus on the technical aspect of trading, you know, really just using price, volume, 1 or 2 moving averages, and that's really it because it's all about fear and greed, which is reflected in the charts. And
Amen.
so if you can really understand that, you don't need anything else. So that's really a kind of synopsis of what we do.
Cool. All right, next up we have Matthew Buckley, or as we call him, Wiz, because of his call sign. Wiz, tell us a little bit about yourself, to those of us who don't know you, and tell us a little bit about TopGunOptions.com.
You bet. So Matthew Buckley, and as Dave said, my call sign's Wiz, and that's a 10-drink minimum to figure out how I earned that call sign, or maybe earn a demonstration of how I earned that call sign.
I'll buy those drinks. Just let me know when you're in town.
You got it. So I flew the F-18 Hornet for the United States Navy for about 15 years. Graduated from the Navy Fighter Weapons School, which many of you obviously know is Top Gun, and flew 44 combat sorties over Iraq. When I was a young officer in the Navy, thank you, sir. Young officer in the Navy, instead of reading the newspaper with my boots up in the ready room in between flights, I was always interested in the financial markets, and this was the early 90s, and there really wasn't any timing research or Pristine or any of this stuff, and I taught myself how to trade equity options, and I applied the same methodologies, the same ethos that I was learning flying fighter aircraft, having a strategy, contingency planning, employing tactics, knowing when to eject out of a bad situation, and with no emotion around it, hitting certain points and going, hey, you know what, time to give the jet back to the taxpayer. So worked out extremely well. One of our mottos here at Top Gun Options is trading is combat. It literally is a form of combat. Obviously not the real thing. We're using different types of capital, human capital, and then obviously money in this case. But if you treat your trading with that same ethos or mindset that, hey man, I don't like losing. At the end of the day, in trading, somebody's going to win and somebody's going to lose.
Yeah.
And at Top Gun Options, I prefer to be on the right side of that trade. As we talk throughout this, Dave, you'll see how I'm no rocket surgeon. I kind of stole what they taught me in the Navy: primary, intermediate, advanced. So they can take somebody who's never even seen an airplane before, and in a short amount of time, turn them into somebody flying off the pointy end of a carrier. So that's what we do at TGO. Is if you don't even know how to spell the word options, like some of my Marine buddies, or you're a options Jedi master, we can make you better. So that's what we do here at TGO.
Yeah, as I said before in these shows, I've met a few pilots who weren't successful traders, but I've never met a fighter pilot who wasn't, because you guys know sometimes that you just have to make those decisions and think about them later and contemplate your navel. So congratulations on, or I should say, thanks for your service to our country. I appreciate that.
You bet.
Neil, let's go to you. I'm going to guess Thailand. Where are you today?
Nope, I'm back in North America, home of where supermarkets are open until midnight, and everything is 7 times as expensive.
Oh, okay. Well, Neil, for those of us who don't know you, Neil likes to travel the world trading, and his name is Neil Batho. He's with TraderReview.com. For those of us who don't know you, tell us a little bit about yourself and tell us a little bit about TraderReview.com.
Sure. I used to be a broker back in '99, and that's when I first learned the technical analysis I do now, point and figure charting, and I combine that with Ichimoku Cloud, and this is what we've been using to time the market for many years now. And what I noticed in trading is, like the other guests were saying, fear and greed. You have to have a plan, these types of things. But what I really specialize in is the entry point. When a stock's going to come down perfectly to the trend, it's going to make its move. And you can get these big moves, 10, 20%. I mean, we were in the gold miners, triple leverage ETF, 19% in a day. When you time it so perfect, why don't you just get out? I mean, we're brainwashed into holding long term. And what people don't understand is you hold an index long term, but the index itself is trading. The index always changes. So everybody is trading. So I'll do stocks, options, use a lot of technical analysis that other people don't use, simply because this stuff works. And then I'll send out all the reports to my subscribers every day with updates.
Cool. I agree with quite a bit of what you said. I think you can still hold positions longer term, but we'll talk about that in one second.
I'd like to hold a long time.
Let's go to Ken Chow next. Ken Chow is with Pacific Trading Academy. He's a veteran to this show. Ken, tell us a little bit about your trading and tell us a little bit about PacificTradingAcademy.com.
He's having some technical problems. He's not on yet.
Oh, okay.
Hopefully he'll be on in a second.
Well, we'll put him on hold for a little while then. To those of you, go ahead.
I was just going to say that I have corrected the typo on the report now. So for anyone watching, you can go to TimingResearch.com/reports, and that question 2 has been corrected on the report.
Okay. To those of you who don't know me, Dave Landry of DaveLandry.com. I believe, kind of like I think as Neil sort of alluded to, that you can only really predict the short term when it comes to the markets. It's kind of like akin to predicting the weather. If it's cloudy and thundering, you know it's probably going to rain pretty soon, but you don't know if it's going to be raining this time next week or next year. So you could predict the short term with a fair degree of accuracy. Obviously, there's still a chance for losses. There's always a chance for losses. But if you get the short term right, I believe you could also stick around for the longer term. I'm slotted as a swing trader, and I think my first 2 books have the word swing trading in the title. But in reality, I will stay with a position as long as it moves in my favor. I have a 21-page report on this. If you go to my website, DaveLandry.com, and you click on the banner ad that says "Confused About Trading," you can download that report for free. Let's go to you, Kurt. Kurt, based on any technical or fundamental indicators that you want to use, would you predict that the S&P 500 index will move higher or lower from Monday's open to Friday's close? And that's obviously the close of September 4th.
Well, like I said, we really just used the technicals and some moving averages. So given what happened last week with that complete washout, it's been interesting, to say the least. We had a complete recovery of that gap down and even started penetrating into the sell-off which started Thursday and Friday of the week prior. So at this point, the 60-minute trend, which is kind of our longer-term intraday trend that we follow, is up, and the market's had a difficult time moving back down, or at least trying to move back down today. There have been several attempts, and hasn't been able to happen. So at this point, it looks as though we will continue to try and move higher. We've got a 20 MA around the 204 level, and that may need to be tested before we see if it's actually going to put in a lower high and move back down. So having said all that, short term right now, I'd say that we continue to move higher until a level of support is broken on the 60-minute chart, at which point we'll then go lower.
Okay. And based on range of confidence in your answer to that, by estimated probability, you have correctly predicted next week's market move.
Oh, I mean, I'd say I'm 100% confident in that.
Wow.
I mean, we just follow what the trend is doing at that time. So
okay.
if it changes, then we have to just change with it. So, I'm not looking to get married to any bias, especially right now, given the uncertainty that exists. I mean, I think the swing environment's definitely a bit more up in the air, but we just, like I said, follow the trend and let it kind of guide us and take us where it's going.
Cool. Kurt, can you hear us?
Oh, I think Ken's on here now.
Ken, okay. Ken's back. Ken,
How you doing, guys?
Hey, Ken, good to have you back. Look, let's play a little catch-up with you. Tell us a little bit about yourself, and tell us a little bit about PacificTradingAcademy.com. And once you do that, go ahead and answer the question this week, which is, let me get it back up again because we changed it. Based on any technical fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower by Friday's close, and that's September 4th? And then give us a confidence rating on that. So you got a lot to do here, Ken.
Okay.
Go ahead.
My name is Ken W. Chow. I'm a private trader. I trade mainly the S&P and the oil futures, and I day trade. And I also take on students. I work with Pacific Trading Academy as one of their mentors, and I basically share my trading approach with students. And they're a great company that would give you the service that you would need in order for you to learn from mentors like myself. And so I've contracted with them to work. I'm a private independent trader, and I do short-term day trading. So to answer your question, what's going to happen in the next few days, end of the week, it's going to float around, okay? I would say that's basically what's going to happen. There's a lot of uncertainty right now, and based on what I use, which is pure chart patterns, it can snap either way as soon as a certain pattern shows up. And that pattern hasn't shown up yet, or to say it another way, it hasn't shown up to where I would be able to see that far down the road. The further out, somebody would ask me to make a prediction, the less accurate I will be. I can tell you what may happen in the next half an hour or 1 hour based on chart patterns that I drill down from the daily chart to the 15-minute chart to the 5 and the 1 minute chart based on this little scenario right in front of us. But to really project that far out, there are a lot of factors that may come in terms of chart patterns, which is what I look for. Would it go up a little bit? I think it'll float up a little bit more, okay? Only due to just because of the momentum of how these things can continue to float up. But I would definitely not give it a high confidence rating. I'll give it a 5 between 1 and 10.
All right. Cool. All right, let's go over to Wiz. Let's go to you, Wiz. Next, you know the routine. Basically, technical fundamental indicators you want to use, higher or lower by Friday for the Ps, and then go ahead and rate your confidence on that.
At Top Gun Options, folks, we take more of a, I call it SOT, strategic, operational, and then tactical. There's no such thing, in my opinion, as an options strategy, an iron condor, a butterfly, selling covered calls. So folks are like, no, that's a strategy, Wiz. Well, you'd be wrong. Those are called tactics. A strategy is something higher level, saving for college, retirement, managing risk, buying a boat in 6 months. So at TGO, we get strategic, and if you take a look at this chart of the S&P 500, here's this rip-your-face-off implosion. I mean, that's just the, oh my God, the world's ending tomorrow type of stuff. Here's the, oh my God, the sun came up. No, it's not. Folks, if you take half the rip-your-face-off implosion, and again, I'm no rocket surgeon, but this is a very, very important, I'm no super technical trader, and I don't play one on TV, but if we don't hold this 1980-ish big hair line here in Bon Jovi, we're heading lower. This is a classic, no offense to my people for the ethical treatment of animals folks out there, this is a dead cat bounce. Or if you want to be technical about it, it is in my opinion, it's a bear market rally. We head lower, in my opinion. JP Morgan came out last week with a great report to their high net worth clients saying we got another massive leg down before we retest. Remember, folks, and I'm sure David will get in this in a little bit, we got the Fed meeting coming up, folks, and based on the the J-hole meeting, the Jackson Hole meeting last week, and a bunch of other stuff. We got jobs this week. We got China PMI tonight. I don't see, if we hold this and go higher, everybody strap in. But getting ready for this Fed meeting, this is going to be a choppy week. I think we go to the downside, and I'm going to go with a 0.8 delta that we're down to the downside towards the end of the week.
Yeah, I'm going to dovetail in on you when it comes back around to me and throw up a chart too. But you said a lot of things that you stole a lot of my thunder, but that's okay. Neil, let's go to you.
I read your notes, man. Thanks. Got it for.
Oh, you're welcome. Neil, let's go to you. High or low in the S&P 500 by Friday the 4th, and go ahead and rate your confidence on that.
It's kind of like Wiz says, if we don't break out right here, I mean, we're going to get a drop down of 400 points on the Dow, 200, in the S&P 500. And that could be a point for a speculative buy, because sometimes when this happens, you're going to try to test the lows, but you don't quite get to that last low. And this is a good way where all the novice traders get their stops hunted, where they put them too close. They'll get stopped out, then the buyers will come in again. But I think we can rally back up to 17,000 on the Dow before it's going to sell off again. But we're in 100%
Well, we're looking
cash.
at the S&P 500 though.
Yeah. I'm going to bring it up. Everyone likes the Dow, so I had the Dow chart up.
Yeah, no, I hear you.
2060 on the S&P 500, that is the absolute max we could rally back up to. But we could, if you get a pullback around 1920, that could be a speculative buy, because you'll get that higher bottom, testing the bottom. But as far as the end of the week goes, I think we got two options. If stocks are down all week, prepare to buy some call options at about 2 p.m. Eastern on Friday, because when you have a down week all week in a bear market like this, you can get these massive rallies on Friday as all the shorts start covering and panicking. In the last couple hours, you could make 50% in an hour. So that's really something to look at. If things are just sort of meandering, yeah, I'm going to go with. Well, we're in cash, so I'm going to go with down. Not a lot of confidence. Has to break out either way, so.
All right, give me a number on the confidence.
50.
There you go. Okay, I'm going to elaborate a little bit more on this in the next question, but next question. We have a mountain of overhead supply in this market, and there's nothing mumbo jumbo about my technical analysis. It's just simply trying to read the psychology of the market. And anyone who bought during this range will be likely to get out at break even. And we have a few sell patterns, which I'll elaborate on in just one second. But kind of like Wiz pointed out, we have the big thrust down, and then we just have this big kind of a dead cat bounce. And by the way, why does everybody get excited when we say dead cat bounce, but you could beat a dead horse all you want? And that's something I never did understand. But anyway, the only other point I want to bring about the overhead supply is we take a look at like a little longer chart, and I'll show you some sell setups in just one second. Let's take a look at like a monthly chart in here, and it's probably a little bit more obvious than a weekly. But anyone who bought lately in this range, you have a lot of Johnny-come-latelys when it comes to markets. People sit around, and finally they throw in a towel saying, oh, it's a bull market, I better buy. So anybody who bought during that range, maybe a weekly will show you a little bit better on this chart, will be inclined, again, to get out at break even. And quoting my friend Wiz over there, it's not rocket surgery. It's just the psychology of the market. Now, keep in mind the market can do whatever it wants, but right now I think it's going to have a hard time getting through this overhead supply. And then I'll show you those sell signals when we get to the next question here. Okay, let's go. In fact, speaking of next question, let's go over to you, Kurt. And the question is, what developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Well, definitely going to be paying attention to any and all of the major economic news coming out this week. We've got jobless claims, employment, all at the end of the week that can have an impact. So those are definitely going to be, lightning rods, so to speak, for traders' emotional reactions to, how they're going to position themselves going forward. But other than that, from a more shorter term view, going to focus on those support and resistance levels on the 60-minute charts, looking for a break one way or the other, because I think that can really be the the kick that gets things moving at least one direction or the other. It feels like people are just sitting on the sidelines waiting for some kind of guide, some kind of help in figuring out where we go from here, at least short term, and then where does that take us on the daily time frame? How, as you alluded to, the overhead resistance, how much do we penetrate back into that, because that can have a very significant impact on whether we can really continue to push through it and trend higher on the weekly and monthly charts as we've been, or is this really the start of something more bigger to the downside, where we're going to start trending lower on weekly and even spilling on over to the monthly time frames. So a lot of information to digest from a news point of view. We've got, as Wiz said, the Fed decision coming out soon as well. So all of that stuff is going to be focused on tremendously. And then how does the emotional reaction to all that impact the supply and demand levels in the markets?
Okay. Yeah, I like the way. So you start out on a 60-minute chart and you work your way up from there. Is that what I heard you say earlier?
Yeah, I mean, it depends on your bias. What kind of approach you have. Is it longer term or shorter term? But a lot of times you start with the 60 because I feel that looking at the daily chart, you can see certain technical levels of supply and demand, but it'd be easy to say, hey, here's a lower high forming on the daily of the SPY, but it's not going to follow through unless we break this 60-minute support.
Gotcha.
It would have been easy to get short this morning thinking market's heading back down, but it hasn't followed through yet because we haven't been able to break down from that 60-minute range. So if you're looking at
I find that 60-minute can be a little noisy, but it's always amazing whenever you get a big market move like we just had. If you back that chart or you drill down to something like an hourly chart, it's plain as there. The signals are there, but obviously not every signal is going to work out. But I hear you on that.
Yeah.
All right, Wiz, let's go to you next. What developing events, and they could be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
I think Kurt nailed most of it, so I'm not going to reinvent the wheel here. Some additional things that I'm going to be looking at are tonight. Tonight is big out of China. We get at night our time, obviously, manufacturing and non-manufacturing PMI out of China, and it's funny because a lot of traders ask me, "Well, Wiz, come on now, you believe data that comes out of the Chinese government?" Hell, I don't believe data that comes out of our government.
No
I mean, 2 months before the Great One's re-election, we had the greatest jobs report ever in recorded history, and a year later, it turns out after investigation, those numbers were fudged. So here's what's going to be interesting about this number tonight out of China is if it's a miss, and remember, whenever you're talking about PMI, anything below a 50 indicates contraction in the economy, above a 50 indicates expansion. If it's a miss, everybody's going to go, wow, that's a miss, but really how bad is it since they're lying? And if it's a beat, everybody's going to go, they're lying anyway. So we got to keep an eye, one way or another, we're going to assume they're lying there. So obviously the data out of China tonight is going to be interesting. And if you guys saw in the news, they rounded up yesterday and today 200 people in China for, quote, spreading rumors. So this is what's dangerous is you got to keep an eye on China this week because everybody's like, okay, U.S. markets, we don't care. The world's flat, folks. That tsunami out of China can hit us at any second. We saw the other day, this was on the cover of the Financial Times the other day, Beijing abandons large-scale share purchases. Every time the Chinese government has said, you know what, we're gonna jump out of this pseudo-capitalism and markets stand on your own, the bird falls out of the nest and falls flat on its face, and then they rush in like they did yesterday. Chinese market catches a bid right here as their plunge protection team comes in. So you also gotta keep an eye on China this week. In addition to everything else Kurt said, obviously the jobs number this week. Wednesday we get ADP, which cracks me up. The ADP jobs number on Wednesday, it's nothing more than a jobs program for 28-year-olds at Goldman Sachs and other guys on Wall Street to spend all day Thursday revising their Friday number. That's all it is, folks. The ADP number on Wednesday it's a jobs program, literally, for this on Friday. So I think if we see if there's a 2 in front of this number, I think we might be on track for that rate increase. That's the other reason I'm kind of bearish for the week is the only way the market can rally this week is if this is a horrific number. Remember that, like 9 months ago, whenever it was, like that 85K month, everybody looked at each other like, are we missing a digit on that? That would be about it. So I think everything that Kurt said I agree with, but folks, you got to keep an eye on China, man. The world literally is flat. I think the Greek clown car is gone for a little bit, but I think we're back to a little bit of China watch, in my opinion. Real quick, though, I know that was a rant. You got to keep an eye on the VIX this week, folks. The VIX, let me just share that. Or actually, we're going to talk about that.
We're going to talk about the VIX, yeah.
Yeah, go ahead.
You would amaze. What's the old saying? Believe none of what you hear and half of what you see. What amazed me, I spent 15 years in a bond fund, and I learned pretty quickly that the jobs report, they don't call up everybody and say, you have a job, you have a job. It's a computer-generated modeled number, and that's all it is. And I agree with you, Wiz. I mean, don't you think they might tweak it a little bit one way or the other, or let's get a bad one out the way just for S&Gs, and now we can have some good ones.
Well, what's funny is it's also seasonally adjusted, which means somebody can go in and click a couple ones and zeros for the season, and all of a sudden, we're getting some numbers. So I'm no tinfoil hat wearing crazy guy off of I-95 exit ramp, but if you Google that jobs report I talked about in the past, Jack Welch, as soon as that famous jobs report came out, he goes, that's a lie. That's an absolute lie, and then it turned out to be a lie. So take all of it with a grain of salt. Know that the rate hike is coming. It's not a matter of if, but when.
Yeah.
One of my wisdoms is when interest rates are high, stocks will die. When interest rates are low, stocks will grow. So as soon as we start seeing this rate hike lift off, man, I think these pullbacks that we're seeing, those are the ones where you're like, all right, where's the bottom?
Did you say wizism or wittism?
Wizism.
Wizism. All right, I like that.
I got a lot of them, so stand by.
All right, I'm waiting. All right, Neil, let's go to you. And okay, go ahead. What developing events, technical fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
I'm just going to try to share my screen here, Dave. I haven't done this before. Let's see, is it showing up there on your side?
You're showing, oh, there it is.
You can see a bunch of X's and O's?
Yep.
Okay, so what we have here is bullish percent index for the S&P 500. And did that red circle show up also?
I don't see it.
Okay, only on my screen. So if you look down on the right here, you'll see 32.20. That's the percent of stocks in the S&P 500 that are on a near-term buy signal. And this is an indicator you can use to basically pretty much time the market, or at least time the risk in the market. So basically, when this is in O's, trickling down in O's, getting lower, 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 that means all the technicals are deteriorating in the market. So you're just not trading the S&P itself. These are, every single stock in the S&P 500 has one vote. So you can see at the top 100 down 22, and it's already ticked up to 32. So that means the bulls get back in control. And if you look back at the bottom of the screen, you'll see the number 11. You'll see the O's were down at 22. Those were the big crashes in 2011, and they go back up in X's. So basically, if this indicator stays in X's, it's sort of a bull bias market. And then I wanted to show here. Do you see?
So are you saying that it's over? You're basically saying through that indicator that you're overdone to the downside for now. Is that what you're saying?
It's basically showing that the stocks in the S&P 500 are starting to tick back up onto buy signals when everyone has a vote.
Okay.
Every stock in there has a vote. And then this is another one here. Did this come up with the sort of a red line that goes straight down? Okay. So this is another one, percent of stocks in S&P 500 above their 50-day moving average. And if you look down, almost no stocks in the middle of last week. This is actually below 5. I checked on another chart. Almost no stocks in the entire S&P 500 were above their 50-day moving average.
Wow.
So that's an extreme technical overselling. And I was looking at this and like, God, should I buy calls? Like I'm almost never buying puts right at the peak, calls right at the bottom. But I looked at something like this, I said, this is ridiculous. I looked up September calls on the S&P 500. It was 3-to-1 puts versus calls, almost across the board. Massive, massive extreme selling. So this is something that you can look at too. I'll look more at these indicators, and I'll also look at the index. So if these keep ticking up, then I think we're okay. So, and especially the bullish percent, that's like your main gauge of whether
Someone
you're even
asked me,
thinking about buying. If
I'm
it's
sorry.
a no, I don't even think about buying, hardly
Gotcha.
at all.
Someone asked me something about buying some options, and I'm like, the bomb already exploded. You know, it's too late now, and maybe Wiz could chime in on that in a minute. I think I forgot to give my. I'm sorry. Were you done, Neil?
Yeah.
When I jumped in on you. I forgot to give my prediction. I'm going to go with down, and when we get to the we get back to the closing thoughts or developing situations, I'll bring up the chart and tell you why. And I'm going to go with a confidence of 70% on that. Okay, Ken, last and certainly not least, what developing events, and they could be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
You know, that's always an interesting question, Dave. I agree with everything all these guys have said, okay? And they all make sense. Everything actually, I can't disagree with anything that any of these guys said. But I have to ask, is this a philosophical question or is this a way to make money? Because if you tell a story like, okay, I think it's going to go up, I think because of China, I think, no, I'm going to weigh more on the unemployment report. It doesn't matter what I think. It only matters what the big boys think. So if the big boys think that China should be more important than the jobs or the Fed, then they're going to push it that way, up or down. And so I'm not going to go in there and try to predict which item is going to be more heavily weighted based on what the big boys are doing. It's not what I think, it's what the big boys think. So it's me thinking what the big boys think. Okay, so I'm not going to get into all that argument. So what I'm doing instead is I'm going to wait until the news items, whatever that may be, would hit the fan, and I would watch carefully chart patterns, small short-term chart patterns to see how they react. And based on those chart patterns, if let's say they're going to push it down lower, my question is, hey, is it showing trends to continue going down stronger based on my simple chart patterns that I'm seeing, or have they pushed it down here to where they're going to bounce it right back up? That's all I'm doing.
Gotcha.
From a perspective of making use of this information, I'm certainly going to step out of the way when the thing hits the fan because I have no idea whether it's going to whip up or down. But I'm going to react to how they initially take the news, and then I'm going to trade it accordingly. So really, that question is not. I don't see that far. I don't have a crystal ball. Everything I say is just my own opinion, which doesn't mean anything. Okay, it's what the big boys do that mean anything, and what they do, they'll leave footprints, and to me, that means chart patterns. So
Okay.
I'm just a pure chart trader from
Amen.
a pretty much short-term trading perspective, reacting to how those guys react to the important news.
Yeah, I don't think you're going to get much argument from this lineup today, at least.
Yeah.
As far as developing situations, like I said, we have this overhead supply. The other thing we have is a bow tie in the moving averages. And these occur after all-time highs, and that's simply a 10-day crossing, a 20-day, and a 20-day crossing the 30-day of a short period of time. And until that high gets taken out, you have what I call a confirmed top. Now, to simplify that just a little bit, let's take a look at like a 4-day chart. You can see they're all kind of coming together now. They were all in an uptrend for a while, and then now they've crossed over a short period of time. And this is the 50-day simple, just to give you a good reference. And I guess in this particular case, it's a 4-day, 50-day chart, so it'd be equivalent to a 200-day moving average. Don't get too caught up in the moving averages of the math. All indicators have lag, but they can help to guide you and keep you on the right side of the market. If we go to a weekly chart, you can see that we're very close to getting a weekly sell signal here. And what's fascinating about this is if you go back to 2000, we had a weekly sell signal. In early 2000, we had a buy signal. And by the way, this is on a free report on my website if you want the pattern. In early 2003, we had a buy signal. We had a sell signal. This is a weekly chart, believe it or not. In late 2007, very early 2008, we had a sell signal. And then we had another buy in 2009. Now, the one in 2009 had quite a bit of lag to it. The market still went up a couple 100% since then, or at least doubled since then. So I don't think we should ignore this signal if it comes to fruition. Again, we need to watch this overhead supply. Let me just show you. I like to look at the Russell 2000. And the Russell 2000, the reason I like that, it's just a broad-based index. I got to change computers here. Let's see. Here we go. And you can see that on a weekly basis, looks like we're getting a signal setting up really soon here, as soon as this one crosses here. But what's kind of interesting, the Russell 2000, if you look at the 2-day chart, you had a very clean crossing way back here up at about 122. This is the IWM. And so far, as once this low gets taken out here, this confirms this top. So until proven otherwise, that top remains in place. So let me just go, let's take a look at the NASDAQ real quick, and then we'll go to, I want to show you one more thing in the S&P 500. So in the NASDAQ, you obviously have a 2-day signal, and let's see if we got a 3-day signal. We have almost a 3-day signal and almost a 4-day signal on these. So these can be very significant. Let me just go back to the S&P real quick, and I'll wrap this up. If you go back to a weekly S&P, and one thing that I recently wrote about in an article for Proactive Traders magazine is that everything works better with trend. I'll see people get up and do a presentation, and they'll have 100 buy and sell signals throughout a trend. And my question is, and I don't call people out anymore, because I just sit quietly from now on and enjoy my free beverage or whatever they're giving out. But usually, if they are in a trend, you see like 100 buy and sell signals, all you really would have to do is just use something like a simple moving average and follow that trend. And I sort of gave myself a dose of my own medicine, because I'm a big fan of this bow tie pattern, as I've pointed out here. For instance, here's a sell signal here, again at 2000. But if you just follow the slope of, in this case, it's a 50-day, so it would be 50 weeks because this is a weekly chart. But if you just follow the slope of that moving average, you do pretty darn good on staying on pretty darn well and staying to the right side of the market. In fact, in a year like 2008, where your average money manager lost 50% of their money, you'd have been out of that market really early in 2008, just following that simple moving average up and down throughout the years. Now, keep in mind, you're going to have lag in anything. That's why we use protective stops. Friends and family have been calling me lately, worried about me, and that's usually a sign that people are paying attention to the market again, by the way, when that happens. And we've been getting stopped out of the last several months. We only have 1/2 of the position on the long side, and now we're beginning to put on some shorts. So as a trend follower, that's what you do. You let the market take you out first. You can't sit around and wait for these sell signals to happen, because sometimes the market moves so fast you would have lost a considerate amount of money by doing so. But what you can do is pay attention to something as simple as the moving averages to keep you on the right side of the market. So I think we have a developing situation here, and we could see a weekly signal. And one last point, not every one of these signals will signal a major bull or bear market. In this case, it'll be a bear market. But every bear market will have one of these signals. So it's kind of an interesting thing that I think right now is a good time to pay attention. It sounds like everybody here is paying careful attention too. So that's good to know. All right, Kurt, let's go to you. Sorry, Ken. Let's go to you next, Kurt. And the question this week is about the VIX. And let me get that up. And it says, the VIX made one of its largest jumps in history over last week. Do you use the VIX as a factor to your trading? Why do you use it, or why not? And that's
I do.
Ken.
Is that for Ken or Kurt?
That's for Kurt. I'm sorry.
No problem. Yeah, no, I do use it. I don't use it exclusively. You know, I look at the VIX as a market internal and basically one piece to an overall puzzle of various market internals that you need to look at. So I also, on an intraday basis, consider what the tick is doing, and then from more of a swing and intermediate term basis, consider what the trend is doing, as well as the advanced decline volume, things like that also have a major role. Put call ratio also as well. So I do use the VIX, but not exclusively, because it's like I said, one piece to an overall puzzle. So having said that, the VIX obviously did have an incredible move higher, and interestingly enough has been going sideways, and the range has been contracting, looking as if it's going to break out, all while the market was moving higher, which is a bit of an anomaly in a sense. And when you have that happening, it almost indicates that there's complacency and that there may be further downside to come. And so we'll see when that is. As I said before, right now the 60-minute trend is up, so we may still need to see a bit more of upside in the market. But as the VIX continues to base up at these higher levels, it does indicate, especially if it breaks out, that we will see lower prices.
Okay. All right, Ken, let's go to you next. Sorry about the confusion. Next week, only one guy with a K in his name, okay? Let's go to you. The VIX made one of its largest jumps in history over the last week. Do you use the VIX as a factor in your trading? Why do you use it, or why not?
No, I do not use it. Basically, the VIX is volatility type of index, and you can see the volatility coming when you see what I call shallow retracements. If you look at the 60-minute chart, the last few days of last week into Monday, all you see is lower highs, lower lows, but those lower highs were a lot lower than the previous highs, and those lower lows were a lot lower than the previous lows. So in other words, you have some fast downward moves caused by the bears, and small bounces caused by the bulls. So the bears are obviously running the show, coming down hard last week, and you can see that on a chart. If you look at a simple bar chart, which is what I use, these simple patterns show that you have a segment of the market where you're going to come into strong volatility. Now, coming into earlier last week, the middle part of last week, we see some sideways patterns on the 60-minute chart, meaning that we have some transition going on, and by going to different time interval charts, you can see segments of the market where it's running fast, which means a bunch of shallow retracements, and consolidation, which means it can turn around or it can keep on going in the same direction, shown by deep, choppy retracement. So I'm just a simple chart pattern reader. I use a lot of patterns based on deeps and shallows within patterns, but I'm not going to look into other indicators to upset the apple cart based on what I've got going in terms of finding that predictable leg of the market once certain chart patterns show up. So no, I do not use VIX or moving averages or oscillators or indicators. So just pure charts.
Okay, cool. All right, Wiz, I don't think you have anything to do with the VIX, do you?
No idea what it is, man. Not a clue. Yeah, I absolutely use it, and so we'll throw out some wizisms here. When vol is cheap, you buy it. When vol is expensive, you sell it. Write that down right there. Learn it, live it, love it. As you can see, I use the term resting heart rate. The VIX tends to revert to its mean. Okay, the VIX isn't Apple. Well, bad example. The VIX isn't like, I don't know, AIG stock that up and to the right. It just kind of keeps grinding to the upside. The VIX is a signal of uncertainty in the market, and not necessarily, folks. Now, obviously, this biggest one-day jump in the VIX in history. I was in the board of trade when it hit 80 or whatever the hell it was that day in 2008. But this was the biggest one-day pop in VIX. Look at what it did, folks. I'm down here in South Florida right now, and a month ago you can get hurricane protection really cheap. Well, about 3 days ago, with Erica bearing down upon us, it's very expensive. So after there's a freak out or after there's uncertainty, the certainty comes back, and then the VIX reverts to its mean. So I think this, this kind of, let me go to the 10-day here. So we sold, I'm not going to say right there, of course, right around here we did a live trading session where I sold a bearish double vertical. And that's simply two trades on top of each other. A bear call spread, which means I don't think the VIX is going up, and a bear put spread, which means it's going down. And this thing's absolutely crushed it since we put it on. This is, I hate using this term, almost like shooting fish in a barrel type of trading. The VIX is going to go up, in my opinion, going into this Fed meeting. And if she doesn't raise rates in this Fed meeting, it'll be the next one. If all of you all remember, let me just hop in our time machine. Let's go back. I think it's got to be the 5-year chart. Let's go to June-ish of 2013. If anybody, so the VIX goes from 12 to 24. Ginormous spike in vol. Now, just about everybody listening to this would go, I'd ask them and say, was the market going up or down when the VIX spiked from 12 to 24? And I guarantee you 98% of everybody would say, well, of course the market went down, Wiz, and you'd be wrong. The VIX went up because this was going into one of those Fed meetings. Everybody thought it was the Fed meeting where the Bernanke was going to start to taper. Okay? So remember, folks, the VIX isn't necessarily a sign of the market imploding. Write this one down. Market up, VIX up, something's up. Okay, so it's a sign of uncertainty. So I use.
I better trademark a few things before you steal them all.
Exactly. So look at the upside calls on VIX going out to October. I mean, the September upside interest is even more scary. You look at the 50 and 55 strike. Now these could be sold, but I know through my intelligence gathering, a lot of these are bought to open. So the 45, 50, 55 strike, I mean, hell, people are buying disaster insurance up at the 60 strike. Move out to October, the hurricane forecasters are looking even scarier. What is it? The one of these has 150,000 open interest. So you got to look at the VIX, folks, but know that it's not necessarily an indicator that the market's going to pull back. It's an indicator of uncertainty. And right now, looking at this chart, let's go to the 10-day. We're kind of riding on that. Okay, which way are we going to break? Up or down? We're not going to stay here forever. This might be the new resting heart rate, kind of up in the 20s, but I doubt it. We're either going to pop to the upside on vol, which I think we're going to. So I'm getting out of this bearish double vertical I put in and taking some profits, and we're getting ready to put on a bullish double vertical because I think the VIX is going to pop going in to the Fed meeting. So I absolutely use the VIX and we trade it. I like trading VIX. Now that's an 8-hour lecture. I'm not even going to get close to doing it because there's like 25, 30 different ETFs that trade VIX. You know,
and most people don't understand them. I'm friends with McMillan, who obviously you know. And he'll get up and give presentations, and people just completely don't understand how those work. And if you watch CNBC, a lot of people will get on there and they'll talk about they're just so wrong. I mean, I know guys like you must just be jumping up and down and freaking out, but
first of all, I call CNBC Comedy Central. I mean, if you're taking stock advice from a guy with a cowbell and an air horn, you deserve everything bad that's going to happen to you. And I know John and Pete Najarian very well from my time in Chicago, and they do their best to try and explain options, but you're right, CNBC doesn't give them that opportunity, but a guy like Larry McMillan, the VIX is so misunderstood, and they try and dumb it down, but be careful trading those ETF. The VIX is a derivative. These ETFs are derivatives of derivatives. Now we're dividing by fractions.
Yeah.
And putting instant coffee in the microwave, we're all going to go back in time. So be careful trading some of that stuff. But I absolutely use it, obviously.
What most people don't realize, and this was I wanted to jump in earlier, but you had such good points to make. What most people don't realize, or many people don't realize, is that the VIX is not like some puts indicator. It's puts and calls. So it's the applied volatility on them. And again, if you don't understand what you're doing, then don't do it. I leave the option stuff to the options guys. I spent a long time advising a fund that just traded options exclusively, but my job was just technical analysis, and I stayed clear of the options for the most part. Neil, let's go to you next. The VIX made one of its largest jumps in history, blah, blah, blah. Do you use the VIX as a factor you're trading, and why do you use it, or why not?
I'll use it for something like an extreme, like when because stocks will fall a lot faster than they're going to go up. So obviously when stocks fall fast, the VIX is going to spike. And when you see that massive spike like we did last week, I'm looking at it, I'm thinking, is this a contrarian play you can do? And I'm just looking back here on a report I wrote, and I said, the September 18th SPY 195 calls are way out of whack. There are 39,779 call options open interest, 189,033 put options at the same strike. And so I think the VIX, when it gets to an extreme like that, can really be a great indicator for a bounce, at least a bounce in stocks. If you're short, get out of your shorts immediately. Maybe look to do a small position on a bounce. And when the VIX is trending down really, really, really slowly, like it was a couple years ago, then you can pretty much stay long without any worries. But just look at the technicals in the overall market itself, and when you see a doomsday type of sell signal and all the indicators starting to roll over, you know that VIX is going to spike. But I don't necessarily look at the VIX to trade specifically, except in a unique situation like happened last week, where you get that massive spike. That's going to be it, at least for the time being. And when the VIX comes down, you can look for at least a small move up in stocks.
Yeah, I agree with you on that. I also agree with Wiz too. I mean, I wrote some systems years ago, and I wrote a lot of VIX systems. And the bottom line is the VIX is a reversion to the mean type market. And those systems printed a lot of money for a while, and then we had the volatility dry up years ago for quite a while. And what I learned from that experience is it only matters when it matters. And I think that's what Neil was alluding to some point. And then, like Wiz says, this is the S&P 500 I have plotted in the background on this VIX chart. And when this VIX gets stretched to one direction or the other, usually you'll get a reversal. And I usually use just like a 10-day simple moving average as a good gauge. And you can see right here we got stretched way up here. Then, of course, what happened? We reached that panic sort of short-term bottom. And then now things are coming back in. The market's going back up again. But just keep an eye, and I always like when you're on Wiz, because you always bring up that resting heartbeat thing, and I always forget about that. And that's where the moving average comes in with the VIX. So just watch to see if that VIX gets stretched away from the moving average. I don't watch it anymore. In fact, I actually get emails from people. I watch it like when Neil said, when it matters, I'll take a peek at it. I don't watch it day in and day out, but I'll actually get emails, which is kind of cool, for people who are still following the systems from back in the day. And they'll email me when I have a buy or sell signal, and that's kind of like my reminder that, it once again matters. And that's kind of like intermarket technical analysis. I don't want to get sidetracked too far on that, but that only matters when it matters. When stocks are reacting to the dollar, either positive or negatively, it's probably not a bad idea to pay attention to the dollar or bonds or gold or any other index for that matter. But as a general statement, I really don't use the VIX that much, but obviously when the market starts cracking like we did recently, I start taking a peek at it like, wow, 50 on the VIX, we were down, below 15? That's a big deal. So anyway, all right, let's go back to Kurt. Kurt, any closing thoughts or anything you want to add or anything else you want to tell us about pristine.com?
First of all, thank you for having us here. First time
Thanks for being here.
being on the show, so really appreciate that. As far as closing thoughts, at the end of the day, it really comes back down to fear and greed, supply and demand. And, we have these economic reports that you need to be aware of. You don't necessarily need to be concerned with what the numbers are, because as Wiz said before, the numbers are going to be whatever the government wants us to see. So you take it with a grain of salt and just play or focus on the reaction to it, because that's ultimately what's going to drive anything up or down, is how we all are feeling about that news and how to internalize it. So it's all about following the trend at the end of the day. That's what's going to keep you on the right side and make you profitable.
Amen. Amen. My nickname in the industry is trend following moron. So because I do try to keep it simple and I don't really use a whole lot of indicators. Kurt, let's go to you. I'm sorry, Kurt. There, go again. Kurt and Ken. Ken, let's go to you. Ken Chow with PacificTradingAcademy.com. Any closing thoughts? Anything else you want to tell us about PacificTradingAcademy.com?
Well, Pacific Trading Academy strives to help people trade and make money, bottom line, okay? And what I would say personally is that whatever type of trader you are, you want to find a system, a method, an approach that would work for you, okay? And I can talk about different themes or different ways. I can only share what I like to do for myself. And if Pacific Trading Academy, comes up with some students who would like my way of trading, then I would, of course, teach it to them, and they would love it. As you can see, we have different guys here with different types of approaches, and they're all very valid. Not that one is better than the other. It's that what are you personally comfortable with? Is it a shorter term thing where you can rely on VIX, or are you more into options like what Wiz has, or are you a pure chart reader, which is what I do? And I'm more of a short-term chart reader. My trades are usually 1 to 2 hours, and I'm out. I'm not a scalper, but I'm certainly not going to hold overnight. So you want to look inside yourself and say, which approach would work for me with my temperament, my style, my patience levels, and my propensity for telling stories or ideas, or do you want some pure solid chart patterns? So we strive to match your trading style with the best mentor that can provide that for you. So again, I'm just a pure chart reader. Everything's baked into the charts. That's what I say. And that's in the end, I'm just going to look for that small piece that's predictable, and I'm out. So there you go, Dave.
All right. Well, I agree with you on the charts for sure. Wiz, let's go to you. Any closing thoughts?
Yeah, folks, like I said, trading's a form of combat. Somebody's going to win and somebody's going to lose. And in this market, you got to make sure you have your ejection seats ready to go. One hand on the handle, whether it's getting long vol going into September, getting short the market. One thing we're taking a look at, Top Gun Options, we're going to do a live trading session later in this week around, I think, 1 o'clock on Thursday. Is Apple. You got to, Apple's today, their new iOS, they can block, spy or ads from popping up on your iPhone. And we got the September 9th, hey, come see the cool thing that we're going to have out for Christmas, the G.I. Joe with the Kung Fu grip. So we're going to be, I think Apple is beaten up here. It's not going to zero. I get that China's, taking a lion's share of the kick in the gut for why Apple's down. But trust me, people, a quadrillion or however many Chinamen are going to be getting their Apple on, and I'd be getting long Apple here because it really is its own stock market. Yeah, it's kind of moving around with our current stock market, but I mean, hell, Apple's got its own VIX, its own volatility index. So we're looking at opportunities, but again, we're using the VIX to stay frosty, and also employing SDS and SH, Sierra Hotel and Sierra Delta Sierra, the ProShare short and ultra short S&P 500. Man, hey, it can't hurt to have a little bit of an ejection seat on. So thanks for having me, Dave and David, and good being here with Kurt, Ken, and Neil.
Hey, all right, Wiz, glad to have you. I've always wanted to ask you. You always talk about the ejection seat, ejection button. Have you ever pressed that button?
My God, man, no, and never prematurely either.
So, like my friend Greg Morris says, not the name drop, but he's one of the older fighter pilots I know. He says he's never scratched an airplane. So I'm guessing you're the same way, huh?
Same
well,
way.
that's good. All right, Neil, let's go to you. Any closing thoughts? You know the routine.
Yeah, sure. I think for anyone in trading, what you really need is to have one big basic barometer you're going off for your overall direction in the market. So like Dave has, he's got his moving average crossovers. That's great. You can also use the Ichimoku cloud. If it's above the cloud, you're in. Below the cloud, you're out. Simple. Use the daily or the weekly. I'll use that. I'll use the bullish percent. X's, thinking about buying. O's, I'm out, I'm shorting, or I'm in cash. So you need to have some sort of a barometer. I'll see so many people as the market's going down, and they're like, "Where do I buy?
Yeah.
Oh, do I buy now? Oh, it's down. Oh, do I buy? Oh, I missed it. Do I buy now?" And then my question is, why are you not short? Why didn't you short way back up there? I mean, it was so easy to short. And you just got to have a barometer, look to trade the market both ways or be in cash. So whatever barometer you want, use that and know that it's going to be a swing trade, a long-term trade for months, or it's going to be a bounce trade that might only last a couple of days if you get a huge gain. So find the barometer that you like and use it.
Amen. I mean, that's one of the problems with the show is one of the complaints is not enough controversy. So that looks like we have a lot of controversy this week either. I fully agree with you on that. We're running a little long, so let me wrap it up quickly. Dave at DaveLandry.com. I answer all emails. Sometimes I need to add the word eventually to that. I do a weekly chart show, which is interactive. So if you want to come to that, see the countdown on my website. Also, the countdown for this particular show is on my website too. My website is educationally based. I have a lot of information there. A lot of it is free. For instance, I was talking about we need to pay attention to these transitional signals, these emergent trig signals, and the one I was pointing out was the bow ties, and that's a free report on my site. So download that. I also have nearly, last time I checked, close to 1,400 YouTube videos, which include those weekly shows that I do. So check those out as you have time. And there's a lot of things I get into, like the big deal lately has been the death cross. So I covered that in quite a bit of detail, and I'll probably talk a little bit about, or as much as I can stand at least, more about it on Thursday. But anyway, great show. I'll let David thank you guys individually because there's so many of us this week, but fantastic show. Thank you guys for being here. And David Cosman, let me turn it back over to you.
All right. Yeah, thanks, guys. Great show. I just want to remind everyone who's watching, you can go to TimingResearch.com/reports to download this or any past report there. Also, next weekend or sometime between Friday and Sunday morning, go to TimingResearch.com/current survey to fill out the next survey before the next report comes out. Also, want to mention that join us next week. Rob Hanna, Thomas DeLello, and Jason Jankowski are going to be back. And I want to thank my guests, Kurt Capra of Pristine.com. Thank you for being on for the first time today. And Matt Buckley of TopGunOptions.com. Neil Batho of TraderReview.net, and Ken W. Chow of Pacific Trading Academy. Thanks, guys, for being back. And that's it. So, thanks.
Thank you, guys.
Thanks.
Appreciate it.